All right, it is Monday, which means M&A is in the house right now. And one of the big ones that we're keeping an eye on here is People offering to buy MGM Resorts for $48.30 a share in cash. And for anyone who's wondering, People Incorporated is a company controlled by Barry Diller. So let's bring in Jody Laurie. She's our senior credit analyst for more on this. Jody, walk us through what this looks like, because this is $48.30 a share in cash. Is there going to be debt involved?
Oh, there is going to be debt involved, Scarlett. I will not, doubt that by any measure. Now, of course, is the deal going to get done? That's the bigger question. But right now, so People owns 26.1%, and they're planning on increasing that by 24% in terms of total ownership, or 24 percentage points in total ownership. And so they want to own 50.1% and have other investors own the other amount. Now, if you look at the whole package of that 74% that's getting acquired, we estimate that's about $8 billion in debt if you exclude the amount of cash that People has on hand, which is a little over $1 billion. It's at $1.1 billion. So $8 billion is quite a lot. Now, if you only look at what they're going to buy, it's still it's still a large amount. It's still $4 or $5 billion in terms of leveraging up the company. So we're talking leverage going from mid 5 times to mid 7 times on a lease adjusted basis for MGM. And we view this less so as an acquisition by equals, more so as an LBO type structure. So really just leveraging up MGM, putting all the debt on MGM, and creating a situation in which MGM's private, in which they have more debt on the balance sheet, and it's going to be at odds with, of course, the large leases that they already have, which is about 3/4 of the debt that they have on hand.
As a former banker, I don't like this balance sheet to start with. What's your market telling you, Jody? I mean, how do these bonds trade?
Yeah. So, Paul, it's one of those names that really frustrates me in general, just because a few years ago they decided to do a sale leaseback of all the U.S. assets. So they got rid of all U.S. assets and instead went into this sale leaseback structure, which is basically they pay rent, they pay taxes, they pay all the upkeep and capex and operating costs on the properties, but they're a tenant. And so you look at that and you say, well, wait a minute, what's the benefit of that? These are long-term structures with a few parties, and you're paying constantly. Now, it is a little bit cheaper in theory than borrowing debt all the time, but it is one of those situations that as a bondholder, you say, okay, if they only have about 5, 6 billion, 7 billion in debt outstanding, but then they have about 29 billion or 25 billion, in operating leases, you're not really a big fan of that. And so this is a company where, from a business perspective, it's really fantastic in terms of the reach, in terms of the geo structure that they have. I mean, they have buildings in Osaka. They have buildings, obviously, they have MGM China, which is based in Macau. They have all throughout the US and a really big stronghold in Vegas. But then you just throw on those operating leases, and as a bondholder, you can never get comfortable. But even more so now when it's going to get levered up. And so the bonds are just widening.
Jody, what's going on in the casino sector? We had you on last week when we talked about Fertitta Entertainment buying Caesars, and now you have People's buying the chunk of MGM Resorts it doesn't already own. What's happening in the casino business fundamentally that is causing or that is triggering all this M&A?
So, Scarlett, I think we're in a little bit of a late stage indication from a credit cycle perspective, if I had to opine on it, just because you only see these sort of scenarios in these later stages, right? That's when the LBOs happen. We also have the political situation where things are a little bit more lax at the DOJ and the SEC. And so that also opens the door to these acquisitions getting done, even being a possibility. But for gaming in particular, it's sort of interesting because we also have the prediction markets, which of course have created all sorts of waves in the industry in terms of the digital side of things. So that online gaming, sports betting component has been a big sort of avenue for growth for a lot of these companies, where it's really just, otherwise not really a very exciting industry. And the prediction markets is definitely shaking it up a little bit in the US and causing questions of what's the next growth story. So it's not really so surprising that these investors are coming in and saying, hey, I can do a better job, particularly investors that are already smart in the industry. They've already been involved in it in some sense or involved in related industries in some sense. So we're not surprised as much as we are intrigued and concerned for creditors.
Jody, thanks so much. Appreciate it. As always, Jody Lurie, Senior Credit Analyst at Bloomberg Intelligence, talking about this MGM International deal. MGM owns the Bellagio, my home away from home. If you go there,